Hey everyone, welcome back to another FogCutter Live. I'm Mike Curtis here with Preston James, founder of Traders Edge Network. We are here to help you just cut through the fog and the noise of the financial markets. We got a lot to talk about, Preston. Earnings season is now kicking off. It always starts with the banks reporting earnings and getting
Mhm.
things underway. So we got a lot of things to talk about there. Really, just the big one, I think we dive into the state of the market. Everything's kind of waiting for the Supreme Court ruling
Yeah,
about the legality of the tariffs and if that creates a whole bunch of uncertainty. So Preston, I thought we could
right.
maybe start there. Just really, you know, does the market love tariffs, hate tariffs? Really what the market hates is uncertainty, right? So
Yeah.
maybe you could just speak to that a little bit as we get this one rolling.
Yeah. Well, first of all, there's not that much fog to cut where we're at. So I hate leaving this. We're leaving a little bit later today down here in Southern California. But yeah, anytime the markets, um, they get to a place like assuming there's, based off of certain realities. And then this really, I mean, if the tariffs are reversed or changed when the market has built a reality on the back of that for many months now.
Hmm.
It's uncertainty, and um, uh, so yeah, I think we just decide that today, and it's just really interesting. We see the volatility spiking up today, Mike. I mean, that's really
Right.
been really flatlined. It's almost, I commented earlier to you, it's almost nice to see a little movement in the VIX. It's almost like a heartbeat for the market. I mean, it's alive. It's alive.
And the VIX is the volatility index.
Mm-hmm.
You'll see it in headlines as the fear gauge, right? The market's fear gauge. So really, what it means if uncertainty, potential volatility, you'll see that VIX kind of just start to tick up a little bit. And in times of big uncertainty, right? Back in April of 2025, when the tariff uncertainty was kind of going like, where is this headed? What's going to happen? Right. And then that certainty came back into the market, and we had a
Mm-hmm.
really heck of a strong finish to the end of the year. But that uncertainty just can cause that volatility index to spike. So it's always something we watch closely. It also impacts options pricing,
Mm-hmm.
premiums. So as option sellers, we always have an eye on that VIX index, the volatility index. And maybe we could just throw a
Yeah.
chart of the S&P 500 up for just a second, because another thing I'd love to talk about, Preston, we were chatting about this too before we went live, but how the market just needs pullbacks, right? It's healthy. Pullbacks for the market are healthy. So if we look at this S&P 500, we've just been getting up to new all-time highs. But one thing that I like to look at is the momentum, right? We've been creeping up, barely clipping some of these fresh all-time highs, new all-time highs, but there just really hasn't been a ton of energy behind it. It's really felt like the market's just kind of in wait and see mode. So my brain has just been a little more defensive. This news on the tariffs was supposed to hit last week. Was it Friday, Preston? Do you remember? I think off the top of my head,
Yeah.
think it was supposed to be Friday, then it got pushed, and the
Is
news is
anyone sure? Yeah.
not
I don't know.
hearing, and then it's supposed to be today, Wednesday the 14th. So we'll see if that news hits, what it does, what it brings. But really, when the market is it had a pretty good stretch. We pushed for about almost 2 weeks, a little bit higher, a little bit higher. Not a ton of energy behind it, but some profit taking, a pullback. It's very healthy for the market just to attract fresh buyers, where people come in, they say, hey, this is a level I'm comfortable buying at. So
Hmm.
anything you'd add to that, Preston?
Well, just, we're feeling it, especially today here on Wednesday. We usually do these fall cutters on Monday. I try to talk about the whole week. But on days like this, I really get interested in what might be happening to certain sectors. And we're seeing energy stocks very strong today. They're actually benefiting from this selling in the Nasdaq and S&P and Dow. Crypto's got a real big bid today. Defense stocks and healthcare, Mike, and then almost any stock I look out there that's one of those stalwarts that pays, a dividend for the last 30 years or whatever. They're getting love today. Like money's finding a home
Yeah.
in maybe some flight to safety
Right.
uh, type of trading.
Yeah, and you see that VIX tick up, the potential, volatility that the Supreme Court announcement could bring. And again, it does the market love or hate tariffs? I don't think it's really that discussion. I mean, we could spend an hour diving in on that, but it's just that uncertainty of what does this mean? What's it going to lead to? Is it going to disrupt
Mm-hmm.
businesses, their normal operations? So that's the uncertainty that I think can cause that VIX to tick up a little bit. Obviously, the market doesn't love that. So yeah, all good thoughts, Preston. So let's talk some quick earnings. Right, we're middle of January here. This is when earnings
Mm-hmm.
season really is starting to kick off into full swing. These next 3-4 weeks, the earnings calendars are just stacked.
Mm-hmm.
And the banks always kick these off.
Mm-hmm.
And so we just have a full slate of earnings this week. So anything you've got your eye on there?
Yeah, it's not only what they announce, and we're talking about the who's who, right? We're talking about BlackRock, we're talking about Goldman Sachs, J.P. Morgan,
Wells
Citigroup, Wells
Fargo, yeah,
Fargo. All,
yep,
all, all of them are up on deck this week, and I really do see, Mike, that until the tariff stuff gets decided in the courts, it it's almost doesn't matter what they're announcing. And I'll just add that not only is it the earnings, but at that podium or whenever that is presented, these basically the biggest banks in the world are also issuing what's called guidance, forward looking guidance. They're talking about the future and what they see, and that's a big deal.
right,
But it would be a bigger deal if we didn't have the tariff thing clouded over. So um, yeah, well, so it's like J.P. Morgan announced earnings. They're great earnings. Looking forward, great, all this stuff, and the stock's down. Maybe that's some money again going to the sidelines and just waiting
right,
to see, um, someone this big macro level news like the
right.
tariff, and then in the courts. I mean, who's the court? Who's in there? Who are the lawyers? It's crazy deciding this big a thing.
Yeah, definitely.
Yeah.
And then you hear other chatter of, oh, there's plenty of other avenues where the tariffs are going to stay intact. So it's just that uncertainty. It's that
Mm-hmm.
indecision the market doesn't love. And they're always going to attach a headline to it, right? Oh, the market's
Mm-hmm.
down because, right?
Right.
You're never going to see, I mean, sometimes you might see it, but hey, the market just needed a breather, right? It's like there's going to be a reason why.
Right.
They're going to try to attach a reason why. So yeah, we'll see. I mean, is we've seen the market just approach these all-time highs. We've been in a heck of a bullish run since those April lows, the April 2025 lows when all that tariff uncertainty really hit.
Mm-hmm.
And the market's just had a great run. I think most people had a great 2025. We're now coming into what a lot of people are predicting to be a decent, maybe double-digit percent growth year again. But Preston, maybe we just want to put it fresh on people's minds that every year, right, going back till how long, the 50s, the 40s,
Well,
1940s.
we stand on the shoulders of Bill O'Neill and his research, and the late Bill O'Neill, Investor Business Daily, and he talked a lot about market cycles. But one thing clear from everything, when you just step back from the whole thing, since World War II, we've averaged a market correction once a year, and that's 80 years now. Once a year, we average a correction, and the correction. So, what's a correction is, and people think bear markets and all this stuff. Well, the market correction is defined, and by that S&P chart, it would be defined by as the high as it gets, and then as it retraces 10%. That's what qualifies for a correction.
Right,
And then part of Bill O'Neill's research as well is when it cycles lower during the correction, it takes 3 out of 4 stocks with it. That's just what it does. Um, it really, really takes a chunk out of newer, aggressive growth names. It's almost like shining a light on Dracula having a cross and a stake and what else? Water. Is that the triple threat? But I mean,
Holy
it
water,
it
yeah.
yeah, it really knocks newer stocks down. These corrections, and so but I love these corrections because we get new leaders coming out of them. Um, but we just don't. We average one a year, but it's not always on March 12th or the second Thursday
Right,
of
right.
April. And sometimes the corrections, sometimes innocent looking downturns like we're seeing right now, Mike. Sometimes that's the beginning of it. We don't know until we know. And the other thing is from the time it starts pulling back till the time it recovers, on average, is 14 weeks from high through the trough back to the high. So we know one of these is coming. We average one a year.
Yeah.
So there are opportunities.
Yeah, and it doesn't mean, we get to a point like this where, okay, the last correction was, it really started about the middle of February, right? That was the high. If I go back here, it was February 19th.
Hmm.
So we're right here. We're 11 months, right? 11 months
Hmm.
from that. So could it be 11 months? Could it be 13 months, 14 months? Yeah, it's the average is once a year. So like you said, Preston, it's not, oh, we've been 12 months, here comes the correction, go into cash. But we can
Right.
just start being a little more defensive, right? On some of my stock position these last couple of days, I've just tightened up my put protection. I'm like, hey,
Hmm.
some of these have popped. They had a good week. Let me buy, some tighter put protection just in case. It's just investing a little bit more into your just defensive, locking in some profits in a way. And so that's kind of the approach I've been taking these last.
No, and that's Mike, I think that's smart. And I think it speaks to the versatility of options themselves, where if you're just kind of buying and holding in the market, you really can't, you're at the whims of the market. When you're doing strategies that involve options, tightening up put protection, like fine tuning, knowing corrections are realities, and maybe tightening the screws to get used to get ready for it is super smart. And I'm reminded of what the fund manager Peter Lynch said. His observation was so because corrections are, no one wants to go through those, and no one wants to go through a bear market, which we average once every decade. But he was saying that most investors fear corrections so much that they're never invested. They're always so scared of when that's going to happen, so they miss out on the market gain. So it's no good to just be a nervous Nelly and not have captured 2025, getting ready for the next one. But
No, I think
yeah.
that's a really important point. Yeah, because there's a big difference between saying, "Hey, I'm going cash," or "Hey, I'm just going to be a little more defensive." And as option traders, you have so many ways you
Yeah.
can still be defensive. And what I love about being an option seller, which a lot of our income strategies are
Mm-hmm.
built around selling options, is we really don't care, if we hang out at this level for a little longer than you might think in your head. Oh, we're due for this pullback, we're due for this correction. You might be wrong by a month, but you know sell being an option seller, that time is always on your side. It's always in your favor, making you money just as the time
Mm-hmm.
passes and those options lose value. And as an option seller, as they lose value, that works in your favor. So it's just
And
easy
Mike, during
more.
more volatile times, the option pricing increases. So if you're a seller, you take in more premium.
Yeah, definitely.
Yeah. And I wanted to add just one little side thing I've noticed. And the two stocks I'm going to mention right now are not ready to buy. I'm just get very extra curious during times like this because you hear a lot of the chatter out there saying, what if the AI bubble pops and all this move we've had in the market? Well, there's some big 800-pound gorillas, Mike, that basically have already popped. And so while we talk about the market, yes, that's all stocks in aggregate, but the two stocks, Salesforce, CRM, and ServiceNow, which is NOW, Mike, they're trading where those April tariff lows took place.
Yeah.
I mean, the market shot off of those lows. We had one of the most amazing 2025s or amazing post correction years in years. But CRM and now, again, they're not ready right now. I'm just observing that they're probably going to have their turn at some point, and not all stocks are up and toppy and ready to pop. These are big names that essentially have popped. So I like keeping a list of names like this. These are not just the fly by night names.
Right.
Very
Yeah.
interesting.
And we talked about Adobe earlier this morning too.
Hmm.
That in that same vein, right? Just
Yes.
stocks that have just not participated. So
Right.
yeah, interesting. Well, awesome. Preston, anything else on the earnings front? Anything like that you want to hit on? We got a fun story, of course, that we like to share, keep everyone motivated, excited to keep doing a little bit of work, learning a really powerful investment strategy. But anything else before we share Anthony's story as we sign off?
Yeah. Other than that, next week we get a smattering of all different sectors. I mean, next week the earnings season it begins officially this week. It's all financial names for the most part.
Right.
It's on. What do they say? On like Donkey Kong. The dam bursts next week with
Yep.
literally hundreds and hundreds of earnings announcements. So
Yep.
we're right there.
We're in the thick of it. So know your earnings dates, go research those,
Hmm.
take 5-10 minutes, make sure you write it down, make sure you know if it's before the market open or after
Open.
the close, right? Because if you
Very
just have
important.
the date and you think you have, January 14th to adjust your position, but it's before the open January 14th, you had to take action yesterday. So make
Hmm.
sure you know those earnings dates, be on top of that. Yeah, let's throw this story up from Anthony as we sign off. So Anthony sent this in. We love hearing this feedback. Hopefully this is helpful to some of you watching this at home, keep you motivated, keep you excited. I mean, if you haven't started learning how to trade options, come figure it out. There's so much potential. And Trader's Edge, we have all the resources you need to dive in and get learning. But Anthony said, I'm recently retired. My goal is to never tap into my true nest egg and live off of Social Security and my play account. That said, I revisited the money press strategy because I first started the money press method 2 years ago. I read the book again, went through the on ramp again. We have our little on ramp series, help people get up and get open for business, and completed the accelerator program. So here I am with greater knowledge, renewed passion, and 7 closed money presses starting um, on July 11th. And I'm up 3,000, well, 2,998. We'll call it 3,000. Have 6 open trades working. All are profitable at the moment. Looking forward to
Nice.
achievements this year. So big shout out to Anthony. Love that you came back, gave it another try. We try to keep things simple here at Trader's Edge. We know it's some new terminology, and some people just feel a little intimidated by it. But hey, we try to keep it simple. We try to keep it fun. Come learn how to trade options if you're not already. You can see from Anthony's story, can be super lucrative. And you don't need. We've talked about this before, Preston, but you don't need tens of thousands or hundreds of
Right.
thousands of dollars to have some income potential. Some of these money press positions, you can start with $1,500, $1,000, $2,000. You don't need
Yeah.
that much capital. You can start small and work up. So come check it out. Get our money press method guidebook. That's a great place to start. And you can dive in, start learning the world of options trading and these income strategies. So
Yeah, man. That and shout out to Anthony. And for some reason you can't go to college to learn income methods on using some of the best blue chip stocks, basically trading the filet mignon for hamburger prices. I don't know what I'm saying, Mike, but they can't. In all the higher learning places, this doesn't exist. Why do they have to come to us? And they got to deal with me first of all, an ex linebacker whose vocabulary capped at about age 25. Um, to learn stuff like this. But it's just how it is. And so I'm glad he circled back around, read the book again. All I could think of is that's way better than attending college, finding parking, putting up with 400 people in an auditorium. I mean, it's an underwear shrinker.
Yep.
So
Hey,
they
and
don't even teach it there.
it's real world skills. I mean, I remember doing like a history of music class, which is great. It's fun, but does that help you in life a whole? No, I remember doing an astrology class. It's like, how does that help you in life? This education can really help you, as you just saw there in Anthony's story, actually
Absolutely.
see life changing income. So thanks everyone for tuning in. Preston,
Yeah, man.
appreciate your insights as always. And we will catch everyone next week on another FogCutter Live. Take care.
All right. Take care, everyone.